I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CT Review. Today is February 2nd, Monday, 2026. Hope you had a good weekend and a good day today. So we got a big, massive day today. We talked about, go look in the community tab in the posts. I made a post on Friday evening saying we would probably gap down, getting bearish vibes, but we would gap down. And if you watched Thursday's video, I didn't even make one. Did I make one Friday? I can't remember. Maybe. But we sold off here. And I was talking about if we're not going to push up here, that's why I was talking about Friday being most likely a selling day. But if we didn't go up, we would go into this 2 to 2.5, right? And we did. From the projection from here. This is from the FOMC rate, right? So we have last week's low right there, and they were just basically hunting that, right? And then this is last month's low, so January's low. So, and then the first imbalance of the year, which now is just, we're talking about January's. You'll see how we use that even today, which is amazing. But the sell on Friday was you could see that it was stalling, and then the structure was coming down, and they wanted to get as close as they could to Thursday's low, right? So beautiful day today, actually. And if you didn't understand where the bias was going, well, here's the thing. It was pretty clear that we were going to go up only because of the fact that, okay, we had easy selling here. The liquidity, if you don't understand what bias you're going with, you don't understand what direction we're going, you want to take a look at like who's recently, not recently like 5-10 minutes ago or even 5 hours ago, but who's most recently made money, right? And you can see that it's these people who are selling from Friday coming back into Friday's range. You can see that Friday's range is here. Don't get lost in all this. It's pretty simple. And then we were oversold with the 1 hour, the 4 hour. It was clear that we bounced from it. So I already had that data when I wake up, and I don't trade Asia. I'm not going to be a hype and just literally sit here all day. But let's keep this simple. And it was just a fire day here. But you can see that we got the structure. We got a shift of structure right there. See that? I got to push up on that support block here. So they call it a breaker even. And you can see that I'm measuring that leg, and it's going up to the 101.5. It's in the background here. And then the -2 to 2.5. And this was my target, the -2. Why? Well, because again, when we gapped down, we popped up, we swept outside the gap. Look at the signature. See the gap here? See how we come out and we sweep it on purpose? It's pretty like an instruction to tell the algorithm to, hey, let's just come outside for a little good measure, and then we're coming down here. And then what I'm doing is I'm trying to attack at least coming to the low of this gap, which is very influential. Because we got liquidity right there. See these two guys right here? See on Friday when we made these equal lows right here and we bust through and we make a lower high here and it's pretty much your resistance. Well, this was easy to sell, right? Because whoever is patient and waiting all day for this type of flow, they're selling this, right? And now that's why I'm trying to attack that, because I know that was easy, okay? So, that being the case, we're in a deep discount. I mean, we dropped down here, right? We got the shift, and the confluence for me was right here, and then in the middle of this gap, which I'm a little irked that I did not, take another trade to the center. But just trying to frame this conversation here, and then you could see the flow here. At 9:30 is right here. Which way is it going? I mean, it's very clear that it's going up. If you notice like the 15-minute, for example, and just general price action, notice how, look at these bearish candles that push all the way down. When we push up, it's just one blue candle, but then it stops. Doesn't take out the high. So then it comes back down, all bearish candles. Then you pop up. This control of price is in control. That means, like, if you look on the right side here, look at this. It's all push up blue candles and then just a little retrace. then it's push up all candles, and then it's just a retrace. But notice how we don't break the lows of these blue candles. And it's constant. Look on the 1 minute. Now I'm going to transfer over here just so you can read price action if you're new. And I'm talking to the new people here because there's some new people here. But look at this blue candle or the bullish candle. Do we go below these bullish candles? No. Then we get a little bearish candle, and we get all 3, 4 bullish candles here. Look, little retrace, popping up again here. And this is where I messed up here. I should have bought again and went up, but and then push up here, right? And then look at, it's all blue candles here, right? So look at it's just it's a retrace, but until it breaks or closes below those consecutive candles, that'd be a change of delivery. It's still bullish, right? So you're getting this constant bullish candles, constant bullish candle. You get one right there that's bearish, one right there, one right there, one right, and then you break a structure, right? But until then, you're still buying. But I took these 2 buys here to here, and then I was done. So coincidentally, my day was done early. But let's take a look at the fire, because I'm telling you right now, I mean, ain't nobody doing this for anyone doing this. My point is that you'll see this. I'm not projecting any type of swing. See this one right here on this side here. See, I measured this. This is an actual swing, and you can measure that last up move, or in this case down move since it's bullish, but or you could even measure this leg from there to here. You can measure that leg too, since it's a low, it's a high, it's a lower low, and then you break through, and it's pretty much support. So this up candle is, you see how it's digging, it's a bounce right here. So that right there is a shift in structure and pushing up. But if you've been here for a long time, you know that. But the point is, what I'm saying is that what I'm showing you here is, and I've never showed this even in the mentorship, this is not me doing a measurement of a swing. This is a measurement of an algorithmic gap. So write this down for your nose. Now, I don't really use this a lot, so let me just make sure I say that. But I understand this understanding, which is what? We're measuring the gaps, and if you measure the gaps and you project it, you can get an idea of where it's going, just like this principle of this leg here. So let's take a look. When I'm measuring the gap right here, take a look at the projection. -1 and 1.5 here. -2 to 2.5 here. Look at the high here. Look at the high here. Oh, man. I was supposed to change the... Oh, fuck. I'm making this video in dark, aren't I? Hold on. Because my eyes are like... There's something wrong with my eyes. I've been staring at screens for too long. Oh, my God. You're probably like, oh, my God, I can see... Damn it, should I make this video again? I don't know. Oh, fuck me. I don't know if you could see it. Oh, it was too dark, wasn't it? Fuck me, man. 8 minutes. Oh, I want to remember all this. Okay, well, now you can see, right? So hopefully that didn't affect anything. Damn. Well, this is a lot different. I've been changing the contrast, so like during the day I'm not like all messed up. Like, so during my trading time I keep it bright, and then because for some reason I'm having a trouble even seeing, and my left eye is like twitching and shit. Anyway, sorry. So the point is that I'm measuring the gap. The purple is the current week gap always, and yes, there is a big gap in the background, as you can see, which is fucking, right there. It's pretty obvious, right? And that's from 2 weeks ago. So what's it called? I'm measuring the gap, and I can project how far it goes. Look at the -2.5 up here. That's the whole point of me saying all this. Look to the right here. You see this right here? What's the high right here? Look up top up here. See the high here? 912.25. And what's this -2.5? Look to the right. 912.5. It's a tick away. It's perfect, pretty much, right? And then guess what? I have this gap from here. This is all the way from over here. Remember this? Oh, I keep doing that. I don't know why I keep doing that. That is from Sunday, October 26th. Okay. That's what that gap is. Where the gap is, we're talking up here. So what am I doing? Well, algorithmically, we're going through the gaps, right? I want to see that structure. The point of me saying all this is because, and here's the opening range gap, and we're in a discount. Now, I don't see us bearish to roll over. I know that, I don't care if we're bullish or bearish. The point is, I do understand that, we have some liquidity here, right? So that's what what we're attacking here. And, you'll see that, with a strong bullish candle, I'm able to catch this on a 15-second, right? So, now, okay, before I even go to the 1 minute, which you should have seconds. If you're taking this business serious, you should have seconds. There's no fucking question. But if you like detail and you like precision, but when you see a big, strong bullish candle, it's on a 1 minute. All it does is this is the structure. It's higher, high, higher, low, right? And I'm waiting for that. I need to see that. I got to push up, retrace, right here. Push up. Whoops, I didn't hit it. Okay, push up. Oh my god. Retrace. And then, as you see, right? And then what the fuck, dude? So, and so on, right? So as you can see here, that's the flow I'm looking at. So right here, when you see this push up, and then, by the way, you'll see, this is quadded here, and then this is quadded, and then there happens to be a gap by itself. I've been talking about that even last week. There's just a gap sitting on top of this gap here, right? And there's a little one there, and I'm staggering it on purpose. You'll see what I'm saying. Point is that we come up here, and then we're using the top 25% of this opening range gap here. Is I get into this buy right here. So let me go in 15 seconds so you can understand what I'm saying. But, well, shit, before I do, when we're at that, the gap in the background here, we're tagging that, and then we come right back in. Where do we come back into? Look at 50% of this current weak gap. Look where 50% is, and then look to the right. Boom. So it retraces back real quick, and it's 50% of this candle's body. Right. So this is signatures. Now, I didn't buy that. I wanted to buy it, but it pushed back real quick. Right. And I was too slow. I mean, just frankly, I wasn't also confident enough. But I'll show you how I ended up getting into it. Here. Whoa. So this is a 15-second chart. So to the left of I have another screen to the bottom left, and I have a little section for a 15-second time frame. So this is pushing up, and if you're wondering, like, how do you get into something like this? And well, this is strong enough, right? So just pushing by is, as far as momentum goes, as an entry method, great. There's some people that could not take trades today because that's not their entry method, right? So they're literally letting the whole day go by and they can't trade because of the fact that it's not an entry method. Well, I don't look at it that way. I look at it like, well, I have the experience, but the point is that I understand the language. So this is pushing up here. And then it retraces back again, 15-second chart. This is getting into this imbalance. So when it dipped in, I wanted to push by, but I want it to come a little lower because I want to get a better discount, right? And I want to save my risk. So instead of me doing that and buying that here, and by the way, yeah, I know this is too much, bro. Well, 2 weeks ago, which is Sunday the 25th, there's a gap right there. Okay, just so you know. And it's in this background. See how it's a little darker right here? It's in the background. See this right here? And you're gonna be like, oh man, that's too much for me to understand. Well, just chill. Look. See, remember this? See this day here? See this day? This is January 25th right here. See this? It's right here. And look at the open here. Look at the numbers up here. What's the open? The open of this is 585.5, right? Which is this line, as you see me. That is right here. That's the low here. What's the low of this candle? Look at the top up here. What's the low of this candle? 585.5. It's perfect. It's the same. But on the 1 minute, when I showed you me measuring today's current gap, it was off by like 2-3 ticks, right? It was just a hair above it. But that's kind of like what it's doing. It's like it's referencing that as well. So it's referencing all these things I'm mentioning, and we're jumping inside this 1 minute well, I'm sorry, this is a 15-second. The first 15-second imbalance, right? Now, I didn't push buy here because it tagged it and it went away. And I was like, I want to be confident in me taking the trade. So I'm going to wait for order flow is really the whole point of my, oh shit, is really the whole point of my conversation. I want to wait for order flow. And the 15-second, I can see it well. So I didn't buy it. I let it, it went up, boom, went up. And then it retraced. When it's retracing, now I got that flow. I just showed you that right here. The higher high, higher low. That's the first one. That's right here. The second one, higher high, higher low. That's the that's right here, right? Just so it's not overkill here, so you understand. But why am I saying all this? Because this is how I took the trade. I waited for flow, and you're looking for these two down candles is pretty much my entry mechanism. But where's the lowest body down candle? Right there. It's a 15-second. And you see how he hit that? What the fuck? You see how he hit that? That's how I got in. Bink. Bop. Taps in. Now you're going to say, well, what about this wick and this one? Now, sometimes you have to respect this wick first. But in a sense, when the price comes back in for a retracement, I don't want to see it go lower than this candle. And if you follow my videos every day, you know I talk about this. If I was to bring the low of that candle, notice how we don't take it out right there. You see that? So soon as we're dipping in, we get the little drives. They're trying to get as low as they can for the fucker that pushed by here, right? And that's pretty much it. I mean, that's how I caught this trade here. Okay, and bought it. It's a 15-second. I'm gonna go back to a 1 minute. Real quick. But before I do, you can see we push up strong above here and retrace back in. Dip, top 25% opening range gap right there. And the bodies is sitting on the top 25 quadrant of this gap that we've been using. Oh, beautiful. I don't have to go into more detail than that. And then this green here is today's first imbalance, which is also the first imbalance of this month. Right? Oh, it's right next to the first imbalance of January in the year. Amazing. Oh, and just watch this. Then we push up, and then we have an imbalance. I'm going to go to 1 minute again. I'm going to go to 1 minute. So, as you see, I'm catching, in this one time frame, it's a swing. Swing. Candle, low, lower low, higher low. Right? Low, lower low, higher low. So, two higher lows on the sides of the lower low, right? So, and basically, if you measured this wick on this time frame, it would be, oh, look at it. This is going to look like very close to 50% of that wick, right? So that's also the logic of this entry here. By the time I got filled, it was a little bit higher or whatever. Point is that it pushes up, bing, bounces on this time frame. Now this is the first imbalance. Why is it the first? Obviously, because it's not the 930. We're not counting, and I'm using this because it's a great size and it's a displacement candle as well, right? And some will even say this candle, but I'm using this as a bullish imbalance as well, and it's so strong that it's not dipping into this, which it could have. And let me move forward because this is TMI. But here's the first imbalance of the year. What the yo? I don't know what's going on with my mouse, dude. I have to click like fucking 3 times for it to work, bro. It's driving me crazy. I don't understand. Anyways, you can see that imbalance right there, and I expect to. So I take the buy from here, and then I get pushed out right here. This candle right here, this 942 pushes up, closes, and then this 943 wicks me out because when I trail, I always like here. I allowed it to come inside here. It's because I understand it's going to buy again from here. And then I want to carry it up to where my target area is this. Why is that my target area? I was telling you earlier in the video that these two guys right here, see these two guys right here, liquidity, remember the little resistance, broke through it, right? And then the -2. Look where the -2 is. The -2 is laying on the low of the gap. So I know we're going to come into that. So I'm highlighting both that whole area. So as you see, if I highlight the bottom 25%, you can see that it clears this liquidity. And that's it. That's all I was trying to do. So what did I do? I took the trade to here, got stopped out, and then you see it bouncing on top of this imbalance. See how see how it's 50% right there? Another swing low right here. See that? And then you in a bullish scenario, you don't want to see it come into this imbalance. Because this stays empty. Why? Because it's very bullish, and it's a breakaway imbalance. So it's not coming back in here. So if you're waiting for it to come in here, you're not going to get that trade. So it's it induces people to momentum buy as well. Point is, you can see it bouncing right there, but take a look. If I delete this, and then I show, this is the first imbalance of the year, which January 2nd. Do you think that's a coincidence right there? So I made a video on Thursday here, this last Thursday. Same idea of the order flow that went through it. When we came below, I bought this here. I bought it from here and got out here. Remember I was talking about this on Thursday? Go watch that video. But you'll see the data it was very similar. Logic of when we come above it, we're bouncing and we're going through it. And that's pretty much what I'm trying to tell you here. Okay. So I understand that. Right. And then you had the X marks the spot with the other bullish imbalance. They're nested. It's like as beautiful as it gets. And it's a tick away from the top of this opening range gap. So hopefully this is TMI or whatever. Hopefully you're loving this. Point is, I was hoping for a little stretch, and I got wicked out. Then let me move this a little out the way. Excuse me. Then when it wicked me, I pushed buy again. And then now I had my stop loss too tight. Where should I have had my stop loss? Well, in a bullish imbalance, I want to see the lower quadrants completely stay empty. As you can see, we hit the 50 and we come a hair below. But once we leave it, I don't want it to see. It should not be coming back in the 50 if it's a really strong. Can it do that? Yeah, sure. But the point is that I don't want to see that if it's extremely bullish and these signatures of constantly buying. So when I got wicked out here, I should have kept my stop loss. I should have kept my stop loss in the bottom upper half. This is the lower half. This is the upper half. And in this half, all right, if I caught it, the top 25% and then the mid 25% above the 50%, right? I should have kept my stop loss here. And my cheap ass is trying to put it below every bullish candle. Why do I do that? Well, because it's beautiful. Like, for example, here, bullish candle, bullish candle, bullish candle, bullish candle, bullish candle. Notice how they don't take out their previous candle. So for me, it's a trailing method, and it's part of my system when I'm trailing. Point of what I'm saying is that this is just too cheap on the. So I'm human. I mean, and shit happens. But I should have kept it right here. And once but here's because I know it's gonna tag it, right? So yeah, wick me there, and then it fucking did it again. But I have to allow a couple times. Sometimes it's gonna tag it when it's slithering up, right? In this case, a birdieing up, right? So this is giving you understanding of how when I got stopped out here, I was able to enter again. And in normal cases, that's not smart. Like most people will be like, nah, I'm not going to put a full position again right here. Well, I know what I'm doing, first of all. Number two, I know where my target is, right? And what did we do? Well, we started to higher, low here, and then shot straight to it. You can't make this shit up, okay? And I just squeeze it out right here. So I took the trade from here to here, okay? Nice points. 100 points. It was 100 points, wasn't it? Yeah, just about. All right? Yep. And then another 100 points from here to here. Boom. And I squeeze it. This candle just growing. I'm squeezing. In this case, I'm not going to allow it. I'm not going to just keep the stop loss here. because I understand this was my day. This was the objective for the day. Why do I say that? Is because of the fact that the daily range, the average daily range, has already been printed. Look at the high here in Asia, 650. Let's just say 650. What's the low here? Fucking that's 200. That's 270 points almost. Okay. Did I say 270? No, I meant 470. Your daily rate, it was already printed. So I was like, oh, I mean, how far is it most likely going to go? So that's why I left it at this target and I was done. Now I was upset because I wanted to buy up to here. Now, why do I want to come and target this area? Look at the confluence. We have the gap at 50% right there. Remember, that's another gap right there on top. Just coincidence. You can see it right there. You see that? That's just another gap sitting on top of that. Number 2, I have the -2. If I measure this to this, now I'm just measuring the gap. I've never taught this or showed this on this channel before, ever. So you're hearing it. It's not even in my mentorship, and I don't even have a mentorship. It's just it's there, for people who I can't do one-on-ones with you, and I'm not going to get into it. I'm not even trying to advertise it or sell it. I swear on my mother. The point is that I'd never showed this on this channel, but I know this. I just don't use it a lot, but it was pretty clear that and I went to look at it. But look at this projection to the bottom left. You can see the -2. That's where my target was, and look where -2.5 is. So what do you have in this middle area? Why I wanted to fucking, if I was to have took another trade, I would have had another circle here. Just like that. And why is that? Because look at the 930 level from yesterday. We sold, just like this principle of us using resistance here. You can see that the 930 here, we're up, down, up, down. Then we sold from it, right? So we have that confluence. Look to the right. Look to the right of the chart. Look where the circle, the second circle I just drew. And this is the first imbalance of Friday. So they're going right back to it. And I knew that. But at the same time, if you look at the 4 hour and the 10 o'clock was about to kick in, this is this stupid candle right here. I pretty much was like, yeah, fuck it, I'm done. But because this 10 o'clock candle could have really pushed back deep. You see this? This was the 6 o'clock to 10 o'clock candle. This candle right here, this bullish candle. And I was like, dude. And if you look at this 4 hour, especially with the oversold here on the 4 hour, this is the other thing I wanted to mention. You want to lay a body over that or whatever, but that's why pushing up made sense. But when this was when the 10 o'clock was about to kick in, I'm like, this next 10 o'clock to 2 o'clock 4 hour candle could have easily went back inside this gap into here. Easily. It really could have. And that's why I stayed away. But I was a little irked because I wanted to buy this and then push it back up to here. Why? Because the confluence of what I'm just telling you, the 930 first imbalance, the 2.5 on the measurement, the fucking 50% of this gap, and then the projection of this gap of the current week gap. I'm projecting the actual algorithmic gap. So when we talk about algorithmic theory of gaps, gap theory, this is one of the aspects. People use this all the time. I don't, though. I really don't. I'm familiar with it. I really don't. It's just too much to whatever. But in this case, it was just, for some reason, it was just calling me. And I was just like, yeah, let me see what it looks like. And then the -2 is right there, right? And then, and then there's an old little gap, this little one in the background. And you're, oh, dude, this is TMI, bro. It's TMI. So if I had nothing on the chart, if I had nothing on the chart and it was completely naked, I would look at just all this liquidity. You see all the lower highs? Easy, right? That's why I was bullish. That was the main reason why I was bullish today, and I wasn't wrong. And I bought up. So anyway, took the buy from here, got out here. Got it. I took a loss trying to be cheap and get in here. Wicked me, and then I got in again, and I took it straight up to this and squeezed out. Then look again back to the conversation at the beginning of the video. Notice the 3 body candles, right? So, but I looked at this candle, and then it could have been an inversion. And this was the 10 o'clock. So I knew the 10 o'clock was coming out. So I stayed away. And then it gave me this wick. And I was like, man, I'm not fucking with you guys. I'm done, bro. Luckily, my day was done early. Point is that these 3 candles are in control. It doesn't break this low. So I know that we're still bullish. So I left it alone. I was content. Content is different than, following, keep trading. I could have bought this, but why I'm saying that is that when it made this wick, I leave it alone. 10:01, it's just a bullish candle. You don't know what's going on. 10:02, this candle pushes up. Now I'm like, you should be buying this, bro. And then 10:03, now you really know it's buying. It's fucking up here. If it was going to sell, it wouldn't be up here. Period. So I knew I left it alone. Fuck, it's just like, whatever, man. So it went right to just so you know, I'm not, you can't make this shit up. Watch this. Just watch this. So just for the new people here, you can see we come straight through the 25, through the 50, then to the 25. And notice we play around right here. Then we come back down a hair above the 50. We come above a hair above the 25. We come to the 50, blow through it to the 25. You can't make this up. 25 to the 50 to the 25 to the 50 to the 25, then to the high of it. And look at how we go outside the gap by a hair. Right there. Pull back. We're playing around that level. Sells, comes back. Remember, there's another gap here. Well, look at this. Look at this. Comes up, plays around. A hair above that gap. I mean, we're talking the high of the day right now is a hair above that gap. Do you see that? You can't make this up. You can see the separation here now of the gaps, right? Look at that. You fucking can't make that up. But guess what? Oh, you don't say. On Friday's AM session, we sold from that. So again, if I had nothing on the chart, you would just see all this liquidity. And then that was the last swing up here. And we fucking came up to it, right? Oh man, you can't make it up. It's beautiful, buddy. It's beautiful. But see, and then so if you're wondering why I have all this shit on my chart, that's why. Because I got details that no one knows. Do you need them? No. With the experience level that I have, do I need them? No. Without them, I kind of feel naked. I'm not gonna lie. But if I had nothing on the chart and I was gonna tell myself, is the price going up or down today? We already had dropped down and we had 3 drives. Look at that. So drop 1, 2, 3. I'm already that's why I when I already see this, and then you got the flow of everything I just explained here. Well, we're bullish because we're attacking this, right? And that's it. That's the fucking logic. So after it swept above here, where did it go? Boom, sweeping this induced liquidity. Look at this here. This, for the new people, this gap is on this quad of that gap. I'm sorry, this bullish imbalance is on the quad level. It's a high probability, right? Look, do we buy from there? Yeah. And I know these things. So for me sometimes I'm like, dude, I gotta get away from this. I'm gonna keep trading and trading and trading, and that's why I was done and being content because I know myself. I'm like, this is powerful. If I knew that this was gonna buy from here, it's like it's scary to really know the market this well, right? I'm showing you for free. Point is that you have to have control. Point is, even if I know it's gonna buy from here, I still have to have control. Oh boy, 33 minutes. I love talking. I do. And then you can see this down candle here. Same idea. Bing. Look at this 1150. Macro kicking in. Bounces right on top of that 50. Look at these signature things, right? So, anyways, wanted to come and sweep that last high or low here. And we're just sitting there. Got to move forward. VIX. So it's just trickling down, and pretty much we're pushing up here. And dollar is also pushing up, which is conflicting with the whole story of what we're doing today. But again, why it's not really reliable for me. But I just looked at it. If we were bullish or bearish, we were still coming up to wipe out the liquidity. So that's how I got a bias without having a bias, if that makes sense for you. And then we also had this nice divergence. If Dow is coming down really hard like that, you want to see us pushing up. That's what they do. Dow is the manipulation, right? So that's why I don't really trade Dow anymore, obviously, because I want to be pushing up. I don't want to be dealing with, okay, I got to deal with the manipulation, then I got to turn around. No, I would like to just go one direction, right? So lower low here, very easy. You see that obviously that was a nice divergence, and the key of why I'm buying as well. And then when we had this pullback here, what's it called? We had a lower low here with Dow, and then higher lows with these little tweezer bottom candles. And another reason why I was mad at myself that I did not buy that, but whatever, it's fine. But I'm human, and it is what it is. And look at this fucking I mean, it's a manufactured candle. If you don't know that, beautiful though, just beautiful. Went straight to the overbought again, and it's like, dude, you know, when I said you might want to study February of 2025, I meant like, okay, we can turn into a bearish like recession or just a a pullback like last year, but notice that we didn't just sell in January. Notice we didn't just sell off in the beginning of February. We sold off later. Well, I'll show you in a second. But anyways, this is just still bullish. So there's no conversation here. So this is what I mean. Like, I mean, and this is still pretty though. I mean, straight balanced price range, reversal, retracement reversal, closes above the inversion here. And that's an entry method on the sense of momentum. And just they made it a really easy day, but they really wanted to hurry up and get all this, and that's what it was. So S&P, again, they came in to take in that internal lows here, last week's low. That's last week's low, I'm sorry, right here. And that's the issue, is like the agenda for the week is pretty much already done, man. We took previous week's low. We came up above and we squeezed the majority of last week's body. Like if you take a look at it, we took out the low and we already came up to the top 75% of that entire candle. So it's like, that's why I'm mad that I didn't take more advantage of today, because I'm not interested in the rest of the week, to be honest with you. If you're looking for the best day of the week to trade, that was it. I mean, if you ask me, as of now, this is pretty much it. So here's S&P, right? Same. So here's the similar idea, and then you can see the liquidity that they build right before we push off, right? That's another thing that you want to notice here. This shit here, like you see this little bull flag here. See these little lower highs here. So when they ram it, they're getting everybody. So you can see we push up here, and then this candle immediately seals it. So look at the difference. We didn't get that. This came to the half of the body. Over here we sealed the entire candle. So that is an extremely bullish scenario as well. Right? Immediate rebalance, right? Push up. Right on top of the settlement. Pulls back. This is a little dirtier. Obviously, you can see the three candles, and notice it's still bought, right? So that's another reason why I don't want to read too much in it. But this is a reason why I should have fucking bought it. But whatever. That's a divergence with fucking S&P, and I was just very content. I caught pretty much most of the leg, so I left it alone. But you can see here bouncing on that whatever gap that is, previous day's high here, which is Friday, and just literally took out both sides, which is awesome. Just a beautiful day there. And Nvidia was conflicting, and that's another reason why I was like, I'm not messing around, is because of the fact that we had gap down, and as you can see, this well, this is what, 12 o'clock. You can see that we were up here. We were pushing up. We were staying here. And then this candle pushed up. Let me go to a 1 hour real quick. All right, so I happen to be done here, and the 10 o'clock pushed up, which is around. I'm mad that I didn't push buy, but it could have easily rolled over, and I was like, no, I'm good. So what did they do? They pushed up just for a couple more hours, right? And then it sinks at 2 o'clock hard, right? So if we're sinking now like that, what are we doing up here? Still, like super delayed. So I just walked away, and then I'm just trying to tell you what was the logic of me just staying away. What did I just do here? So not pretty for our scenario. Did I miss anything? So fuck, man. I gotta stop making videos. I make them too long. There's a lot to talk about, but I'm because I go into too much detail. And by the way, again, we were inside this. This is the other reason why I understand that breakout level right there, sell off, and we pushing up to squeeze that. So if we go look at last year around the 25th here, not the 25th, on year 25. See this? So I'm looking at like we're like right here. Because look at this, look at this, look at this, look at this. This is January. It's the end of January, and then we dipped low. And then it becomes February. And then we gap down. So look at February. It's January 31st of the 2025 and February 3rd. Notice how we gap down, and it's a strong bullish candle. That's exactly what we got today. See that? Gap down and push strong up. And it didn't sell off yet, right? What does it do? I even caught this. See, and I went on vacation, if you remember. Look what we're doing. Higher high, higher low here. See this? All the way until what? February, then 24 or 21. Yeah, 21 is when, boom. So we had pushed up again just to sweep out the last people, and then they rushed down. So we're in a very similar scenario. Take a look at the data. I mean, we're popping up. They keep popping up. They bring it down. They popping up. They popping it up. They popping it up. Right. So look how high they got this squeezing on. This is the continuous contract, the all-time high. We're like right there. Now that you can see them both at the same time. Sorry. You see that? I hate when I wish they just had it full the whole time. See, so we're right here. Right. So does it just roll over from here, or does it pop up again and then roll over from there if we end up rolling over? But to me, I mean, this leg is pretty extended, and that's why this is not good. I don't really like this situation. But if we were going to keep it simple, I don't even know how to keep it more simple than that. But I also mentioned I wanted to see some type of body come down in here. Remember that gap? I talked about that. So not a coincidence the price came down lower, but that's a nasty close on that wick from last week. All right, so it could be a swing high. And if it does, so if you've been following what I've been saying that might happen, God, I made a video long. I can't believe I did this. We were supposed to get the push up like we did, and then the retracement, however long, and then we were supposed to push up again. All right, and then we come back, right, and then buy up, right, for the month of February, make a high, and then a retracement. We'll talk about that more. So far we got that, and this is pretty deep, but I mean at the same time that it's there. And inside that, remember when I said that, I would expect some higher highs and higher lows here? Well, we never got that. And because of the fact that this breakout level with this strong candle, so the lower highs was a very high possibility. But you're going to want to see higher high, higher low if we're in the same scenario as this here, where, because I remember this clearly, we were doing that here. right? Just higher highs and higher lows, right? Until, you know, we swept and then started consecutive candles turning into bearish. So, but the volatility is looking good, and I like that. That's what we want to see. But what's it called? You can see here what I just, dude, I clicked it 4 times, bro. Pissing, it's really making me upset. About to buy a new mouse. I don't know if it's the mouse or not, but just, or it's the computer. Anyways, you're gonna want to see. So, you know, from here it's like, oh God, so much has already happened in this candle. So, looking at the data here, man, can't even call it, man. Again, you know, pushing up, do want to see higher highs and higher lows up. But if you're bullish, you know, you generally want to be above these gaps. So, especially that one. And this is the first of the month, so I gotta go and draw that on the continuous contract. Oh my God, bro. It's like right next to each other, so it's like, dude, what the fuck? I clicked it 6 times. Oh my God, bro. 46. I can't, dude. I can't. I'm already wheezing now. Again, this was pretty easy though. This was really easy. So, you know, us coming back, to this first imbalance of today. Just this breakout area. See that swing high right there? We just broke right through. I mean, it's just pretty fucking easy, bro. I ain't gonna lie. So you're gonna have to see some strength pushing up, but or it's just a lower high to then roll over. Right now, if I treat like a 1-minute chart, it's like we close strong above these above these bearish imbalances, so it's like an inversion. And that's why I knew that it could have came back in and then bought back up. That's why I stayed out. But that's a pretty good sign of bullish still. So of it just closing above here, it's a change of delivery as well. So on the higher time frame even. So maybe pulling back into this breakaway imbalance is empty. And then pull up again for another most likely bullish day. You're gonna want to see that. And then obviously coming up for this breakout area right here. See this? See this breakout area right here? So you have liquidity, imbalance, and breakout. So if we're bullish, we're going to want to attack that. And then here, and then hit to the 50 area on that wick. You guys take care. God bless.